What if someone told you that a new kind of athletic competition was about to go public? Not the Olympics, not a traditional sports league, something entirely different. An event built around pushing human performance to its absolute limit with no restrictions on enhancement. For most investors, the world of SPACs, special purpose acquisition companies, can feel abstract. These are essentially financial vehicles created specifically to merge with a private company and bring it to the public markets. They don't operate a business themselves. They raise money, hold it in trust, and then find a target to acquire. In this video, we're going to analyze one such SPAC, a Paradise Acquisition Corp, trading under the ticker APAD on the NASDAQ. And what makes this one particularly interesting is its merger target, a company called ENHA, which is building what some have called the Olympics of the future. Before we go any further, let me be clear. This is educational content. This is not financial advice. I'm not telling you to buy or sell anything. Every investment decision should be based on your own research, your own risk tolerance, and ideally guidance from a licensed professional. If you find this kind of deep dive analysis useful, consider hitting the like button. It helps the channel and it helps more people discover this content. Now let's break this down. A Paradise Acquisition Corp is a SPAC listed on NASDAQ, trading at around $10.10 per share with a market cap of approximately $208 million. What does this company actually do? Let's start with the basics. A Paradise Acquisition Corp is not an operating business. It's what's called a blank check company, a SPAC. Think of it as a shell. It was created with one purpose, to raise capital through an IPO, hold that money in a trust account, and then use it to merge with a private company, effectively taking that private company public. SPACs have been popular over the past several years as an alternative to traditional IPOs. For private companies, they offer a faster, more predictable path to public markets. For investors, they offer early access to companies before they're fully established as public entities. Now, here's where it gets interesting. APAD has announced its merger target, a company called ENHA. ENHA is building something unprecedented, a new category of athletic competition called the Enhanced Games. The concept is simple but provocative. Elite athletic events where performance enhancement is not prohibited. No anti-doping rules, no restrictions. Athletes compete at the absolute edge of human capability. Beyond the games themselves, Enhanced is also developing health, wellness, and longevity products, positioning itself at the intersection of sports, biotechnology, and consumer health. If the merger completes as planned, APAD will cease to exist as a standalone entity. The combined company will trade on the NYSE under a new ticker, ENHA. Financial overview. Because APAD is a SPAC, its financial profile is different from a typical operating company. Revenue, $0. This is normal. SPACs don't generate operating revenue. They exist solely to facilitate a merger. Trust account, approximately $200 million. This is the capital raised during APAD's IPO in July 2025, held in trust until the merger is completed or investors redeem their shares. Debt, minimal. The only ongoing expenses are administrative, legal fees, compliance costs, and preparation for the merger. Price stability. The stock has traded in a narrow range between $9.87 and $10.21 over the past year. This is typical for SPACs before a merger closes. The $10 level represents the approximate trust value, the amount shareholders can redeem if they choose not to participate in the merger. For beginner investors, this is an important concept. SPAC shares tend to stay anchored near their trust value until a deal is finalized. After that, they can move significantly in either direction based on market perception of the merged company. February 12th, 2026, APAD filed its S-4 registration statement with the SEC. This is a critical milestone. The S-4 is the formal document required for the merger to proceed. It contains detailed information about both companies, the terms of the deal, and the risks involved. Merger target, Enhanced. As mentioned, this company is developing the Enhanced Games concept, along with a portfolio of health and longevity products. Planned event. The first Enhanced Games are scheduled for Las Vegas on May 24th, 2026. This inaugural event will be a major test of the concept's viability and public reception. Leadership transition. Claudius Chong, the current CEO of APAD, is overseeing the transition. After the merger, Enhanced's leadership team will take over management of the combined public company. Right now, APAD is trading like most pre-merger SPACs, quiet, stable, and close to its trust value. The market hasn't yet fully priced in what Enhanced could become. This is common. Until a merger is finalized and the new entity begins trading, institutional investors often wait on the sidelines. But attention is building. The Enhanced Games concept has generated significant media coverage. It's controversial, certainly, but controversy can also mean visibility. The question is whether that visibility translates into sustainable business value. Let me be direct about the risks here. They're meaningful and should be understood. SPAC-specific risk. Not all SPAC mergers complete successfully. Shareholders have the right to redeem their shares at approximately $10 before the merger closes. If too many investors redeem, the deal could be restructured or even canceled. Execution risk. Enhanced is building something that doesn't exist yet at scale. The Enhanced Games are scheduled for May 2026, but the company has yet to prove it can attract world-class athletes, paying audiences and sponsors. Regulatory and reputational risk. The concept of competition without anti-doping rules is inherently controversial. How regulators, sponsors, media, and the public respond will shape the company's trajectory. Despite the risks, there are elements that make this situation analytically compelling. Category creation. Enhanced is attempting to create an entirely new category of athletic competition. If successful, it wouldn't be competing for market share. It would be defining a new market. Timing. The merger is progressing through regulatory steps. The S-4 has been filed. The first games are scheduled. There's a clear timeline of events that will either validate or challenge the thesis. Asymmetric profile. At roughly $10 per share, investors have a defined downside, the trust redemption value, while the upside depends on execution. This kind of risk profile attracts certain types of investors who are comfortable with binary outcomes. Cultural moment. There's a broader conversation happening around human performance, longevity science, and what natural means in athletics. Enhanced is positioning itself at the center of that conversation. None of this guarantees success, but it does make the story worth understanding. Let's bring this together. A Paradise Acquisition Corp is a SPAC in the final stages of merging with Enhanced, a company building a new form of athletic competition and a portfolio of health products. The stock has been stable near $10, but that stability is temporary. Once the merger closes, the new entity will trade based on market perception of Enhanced's business potential. There are real risks: execution, regulatory, reputational, and market volatility. There's also a clear timeline of events that will test the thesis: the S-4 review, the merger vote, and the inaugural Enhanced Games in May 2026. This is not a recommendation. This is not financial advice. This is analysis, designed to help you understand what this company is, what it's trying to become, and what factors might shape its future. If you're considering any investment, do your own research, understand the risks, and if needed, consult with a professional. If you found this breakdown useful, consider subscribing. I'll continue covering situations like this, where there's complexity worth unpacking. Thanks for watching.